Hi everyone, let's go over my preferred micro scenario including potential trading setup, starting with this move to the upside where Mr. John Howard in the comments actually mentioned that this might be an expanding diagonal. So in this particular scenario we then have a three-wave structure in 1, then we have a corrective structure in 2, another three-wave structure zigzag in wave 3, corrective in 4, and another zigzag in wave 5. Now important is that wave 3 has to be longer than wave 1 and wave 5 has to be longer than wave 3. Now in this particular scenario, wave 3 hit the 1.618 compared to the wave 1. So taken from the low of 1 to the high of 1 to the low of wave 2, toggle on the 1.618, and that is a common target for a wave 3 in an expanding diagonal. Then we have a wave 4, and then eventually wave 5 has to be longer than the 1-to-1 of wave 3, so a trend-based fib extension from the low of 2 to the high of 3 to then eventually the low of wave 4, and the 1-to-1 over here is the one you can see, and price wicked above the 1-to-1, meaning that wave 5 in this particular scenario is longer than wave 3, so that is absolutely valid. So this is definitely something to keep in mind and can be very interesting in potentially this then being a wave 1, 2, and eventually a wave 3 to the upside, where also if we then check the CVD divergences, it could work with the divergences as well. So we have the lows over here, and then currently price made higher lows, but on the CVD, both of them, we're making lower lows. So on the yellow line, you can see the lower lows compared to over here. The yellow line is now lower, even though price made higher lows. So higher lows on price, lower lows on CVD, bullish divergences, to where the target, the minimum target for bullish divergences is taking the high. So that could be very, very interesting indeed. Now there is a rule in Elliott Waves with diagonals where they say, hey, wave 4 price action has to enter wave 1. However, it's not very clear. There's still doubt about this particular rule. In this scenario, wave 4 does not enter the price action of wave 1, but in my opinion, that doesn't really matter. Also because it's not a clear, hard rule in Elliott Waves. So yeah, this is something that is very interesting. A 5-wave leading diagonal. It is very rare to see this, but at the moment, like John mentioned, this could be a very interesting scenario indeed. So thanks, John, for replying in the comment there, actually giving me the idea. Then we look at this move to the downside. So we are basically dissecting the price action in 3 structures. We have the structure at the beginning, the wave up, we have this wave down, and then we have this side wave plan. So I already had a plan over here, which I'll go into in a second, which is still my preferred, but let's go into the move in the to the downside, because the move to the downside was actually, it could be an impulse. So if we look at this picture over here, this picture is from John in the Discord group, and he lives on the other side of the world. So when I sleep, he does his analysis and tends to share things in the group. So I woke up to this and I was like, hey, I'm going to show that, right? So what we're looking at over here is the wave to the downside, this structure over here. And as you can see, I counted the same stuff as John did as well. So let's go through the 3-minute and dissect this, because this price action over here wasn't too clear as well. We all thought, hey, this looks to be an impulse. But when you look at it from, let's say, a 15-minute time frame point of view, it looks like, wait, is this a 3-wave? But then this 3rd wave is way too long compared to this like first structure, because this can't be an ABC, because C is way too long, for example. So, you know, dissecting this structure, and I don't really tend to go to the 3, 1-minute, 3-minute, 5-minute time frames, but John does. He really excels in these time frames as well. So he came up with the following, where from the high, so again from the high to this low, we then have the yellow count, which is the higher degree count. So we have then a wave 1, 2, 3, 4, 5, right? So that is, in my count over here, the green count. So what you see then is this being a 1, 2, 3, 4, and then eventually a wave 5. 5 waves in wave 1, corrective structure in wave 2, a 1, 2, 3, 4, 5-wave move in wave 3, corrective in 4, and then another 5-wave structure over here in a wave 5, completing an impulsive structure. Now that is very interesting because it plays in the hands of potentially the scenario that the scenario that I've shown in my video yesterday, like the potential trading scenario that I'm going to show you in a second. So in this scenario, if this is a 5-wave move up, you would expect you would eventually expect a basically connector wave. Like this is the first structure, you expect a second structure, and you at least expect another structure similar to this or higher, like more impulsive, to the upside. Now if this is a 5-wave structure, you would expect then a 3-wave correction before another move down and then a move up. But in this scenario, if we look at this being a leading, if this is a leading diagonal impulsive structure, then price is not allowed to go below the low over here, because then it is invalidated. So if I open this one, the invalidation over here is down below this wick. But the invalidation of this move and then a 3-wave down is the high over here. So we have very, very clear invalidations. And in this particular scenario, if this is a 5-wave structure, we're looking for a 3-wave up, then another wave 5 down, where this low that we're going to make should not take the low of this wick before then moving to the upside. And that is how this structure, and the scenario I'm going to show right now all come together in one particular potential scenario for Elliott Waves, of course, where we then have, if we zoom in, a wave again, A over here, a 5-wave structure in a wave A, followed then by a 3-wave structure in a wave B, for eventually a wave C to the upside, which then very likely is going to be an impulsive structure as well. Now, as you can see, the 5-wave structure in an A then has a leg B, where B can be an A, B, C type of structure. So I didn't really go into discount this morning because it is very early and I didn't have enough time to actually put this on the chart, and then also go over here. However, looking at the volume at the moment, volume is still very low. And I mentioned in my yesterday's video that, hey, if price is going to go to the downside and volume is increasing very, very impulsively, that is the moment this potential trading scenario is invalidated. But as it stands now, following the Elliott Wave insights, and because of course it is purely educational, guys, you know how it goes, this still pretty much works. So we then have an A, B, C of some sort, and then we have the most common target area for a wave C was this white box as shown yesterday, just below my target area as well, the blue box, the target box over here, the target area. And I mentioned as well that yes, price can wick into this area, then close, and then eventually move to the upside. And look at that, we hit the area, we closed inside the blue target box. Price now, at least for now, moving to the upside, which is brilliant, very, very nice. And what you also see is now that this structure over here, the target area at the top, can be now altered, that if this is the low, and you see the 0 line that I have over here, so the 0 line, we can actually put it on the wick. So as you can see, I kind of prepared it to enter the target box, but now we can put it on the exact wick low over here, and then we get this potential target area for wave C up here. So then we have an A, then a B, and then the target is going to be a C over here, where we have a target box with a couple of confluences, like the daily naked point of control, the 786 taken from the high to the low with the Fibonacci. So that can be very interesting. So looking for a 3-wave structure basically, where also again we have CVD divergences between these lows. So over here we are making a higher low, as you can see, but on both the yellow and the blue line we are making lower lows. So those are bullish CVDs, where the target, at least for the CVD playing out, the main target is taking the high of this wave A. So in this particular scenario, the potential trading scenario was to enter the longs in this area, stop loss then below this low, trading it towards the target area for a wave C. And then after hitting this wave C, because this is then a 5-wave structure, you still expect a connector wave as well, a similar structure to the downside, where the most common target is the 1-to-1. For this being an A, then we have a B, and then eventually a C. So in this particular scenario, then potential trading setup is to ladder the shorts in this area over here with the stop loss above this high, trading it to the downside, where in that case the main target is going to be this target box down here. So this target box has a daily and the range value area low. It's also below this low over here for a bit of a liquidity grab, and it is not taking the lows over here, for this still being either an A, B, C, or it's going to be a wave 1, 2, 3, 4, 5 for way more upside, where then eventually everything plays out. So this is then a 1, 2, 3, 4, 5 or an A, B, C. Then this is an A, B, C, right? And this is a 3-wave structure that is then already finished. And then from this structure over here, we then have the potential long scenario, where the stop loss goes, as I just shown, below this wick low over here, and then you're going to trade, you can trade it to the upside. Of course, guys, this is purely educational based on Elliott Waves, right? There's no financial advice in this video, it's YouTube. So yeah, this is something that I'm currently looking at and keeping my eye on. I'd like to thank you for watching. I hope this video was helpful or valuable to you. Thank you for subscribing, and I'll see you at the next one. Bye-bye.